Thank you very much for reminding me. I am going to go back again. So let's take the fib off. The price range of this candlestick right here that we were looking at before we left is really huge. And we don't want to make the mistake by staying in this trade for that long and seeing so much red on our MT4. So what we're going to do is we're going to fib it from the top wick of it to the base body. The top wick to the base body, and we're going to mark the 50% as our entry right here. The 50% is going to be our entry, and our stop loss is going to be at the base. So if I had taken this trade, this would have been my entry on the daily time frame, and my stop loss would have been here, and my TP, I would be targeting the high above here. Why? Because of the liquidity above this area. I haven't spoken about liquidity yet, but I am going to talk about liquidity. And this trade is 1:5. This trade is 1:5. So you're risking 1% of your account to grow your account by 5%, guys. You're risking 5% on 1% of your account to grow your account by 5%. Is this part recording, please? Yes, I am being recording this one as well. Sorry. Does this work best for a long time frame? It works on every time frame, but then it comes with skill. If you develop your skill to the extent now you understand the market so much, guys, you can scale this down all the way to 1 minute time frame. So where do you enter on the fib? Sorry, the 50% of the fib. Your 50% is going to be from the higher wick to the base body of the candlestick. That is the 50% we want. And the reason why we don't consider the wick is the rejection price zone. So the rejection price zone, no matter what, price will never get to that area anyway. If price is going to respect this candlestick, it will never get to that area. Let me show you one more candlestick right here. Can we identify this candlestick right here? The last red candlestick. Give me a 1 if you can identify that as an institutional candlestick. Where do you enter on the fib? Sorry, I missed that again. I think I've said that just long ago. Give me a 1 if you can identify this red candlestick right here as the last candlestick before the up move. Yep. Look at that. If I should take my entry right from here, same way, price went up, came back into that same candlestick, and what happened? I could have taken a position right here with my stop loss sitting right there. Targeting higher highs. So are we surprised why euro keeps going up? This is what smart money does. Are we surprised why euro USD is going up? If you're getting some value right here, give me a 2 in the chat box. How would you know the last candlestick on the live? All right, I'll show you on the live. Give me a 2 in the chat box if you're getting some value right here on this call. This is just a few parts that you can use in smart money. I am going to join the pieces by the time I finish the call. I am going to try as much as I can to join the pieces by the time I finish this call. Let's remove everything again. How do you identify the price rejection zone or a rejection candle? A rejection candle, that's the wick. Look at how many times the wicks were in this area. 1, 2, 3, 4, 5. 5 days. Wicks were just playing around this candlestick. They could not break it. And why? What happened next? Boom, they went up. I hope that makes sense, my client. Sorry, I did not understand the last example. Okay, the last example, what I did was, this is the last candlestick that I call institutional candlestick. Right? The last candlestick I call institutional candlestick. So if I pull my fib, just like I did on the other one, if I pull my fib from here, I want to mark the 50% of that candlestick. My 50% is the red line right there. And if I remove it, can you see how many times price came on that 50%, but then it respected it and never broke above below that 50%? Not a single body closed below the 50% of that candlestick. What does that tell you? That tells you that this is exactly where the banks wanted to do their business. So for 5 days, the banks were just playing around. So everybody trying to buy, sell, buy, sell, buy, sell. What happened in the end? They took price all the way to the direction they wanted to. And why? Because they had this institutional candlestick right there. So sorry, I did not understand the last example, or I think that's the one that I've done right now. I hope that is clear. Give me a 1 in the chat box if that's clear, then we can go on the next stuff. Thank you very much. So we know about institutional candles. Now, the next thing that I want to ask, do we all know about, sorry, how did you know it was an institutional candlestick? Okay, so I said the last red candlestick before a down move, sorry, the last red candlestick before an up move, or the last blue candlestick before the down move. The last red candlestick, this one, before the up move, before this bullish move, and the last blue candlestick before the bearish move. So you see price was going up, 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 up. And when it was coming down, it created this candlestick right here, the last blue candlestick right here, and then price dropped. So look, once price dropped, it comes back into that same candlestick they intentionally created, and price will drop again. So that is going to be your entry. I hope that makes sense. I think, what's the name? Kiara. Yes, thank you very much for understanding me. Can I go ahead now? Can I go ahead, guys? Give me a 2 if I can move ahead. If I can add some more. Okay, another thing that we need to trade smart money is the understanding of liquidity. Understanding liquidity. All right. What do I mean by liquidity? Anybody in the chat box? How many people understand what I mean by liquidity? Give me a 1 if you do. Give me a 1 if you do. What liquidity means. Where the money is. Thank you, Mika. Pami knows it. I believe Pami will definitely know it. I live here. Everybody in the Harmonic Book Group should know this. Equal highs, equal lows. Double bottoms, double tops, M's and W's. That's what we mean by liquidities. That's what we mean by liquidity. So everywhere that you are seeing double tops, double bottoms, we need that to understand or to trade smart money concept. What do I mean by that? I want to find a perfect example on any time frame and then I'll show you that. Okay, perfect one right here. Perfect one right there. Can we see this, guys? A retail trader knows that this is an M. What do I mean by an M? A retail trader knows that this is an M. So price went there, it came. And price came down here, is a resistance. And because of that, they're looking to sell. How many people think like this in the chat box? How many people think like this when they're trading? Give me a 2 if you think like that. Give me a 4 in the chat box, 2 in the chat box if you think like that. So that the second part of the M has become a resistance. So you're looking to sell it. Don't get me wrong. Don't get me wrong. It's a brilliant idea when it works. It's a brilliant idea when it works. How about when it don't work? Jessica says no. I know you're going to say no because you understand the concept. I understand that Jessica is going to say no. You see, it's a brilliant idea if you want to sell it. But guys, 2, although I keep looking for that perfect M. Right, yeah, you keep looking for that perfect M. You see, it's just a perfect target for me to take. So if I'm trading, I am looking at your perfect M. This is how the YouTube traders trade. Of course, they just want quick. They want to take your money, easy gains. So they won't teach you the tricks of it. You see, you're looking for the perfect M's and the perfect W's. I am looking at taking your perfect M's and perfect W's. So as price has finished forming that M, look at the magic that happened. Oh my God. We're going to use liquidity and institutional candlestick for this setup right here, guys. And you're going to marvel what is about to happen. What about the equal high on the M? Yes, the equal high on the M. That is exactly what I've targeted right here. Can we say that this is the last red candlestick before the up move? Give me a 1 if we understand. This is the last red candlestick before the up move. Let's just mark it up. Thank you very much. I am going to put a line right there on that candlestick. I am going to put a box on that candlestick and drag it over to my right-hand side. Can you see what happened, guys? So should we not see M as down and W's as up anymore? If it works for you and you're taking 20 pips, 10 pips, and you're happy, fabulous. You can go ahead and take the M's and W's. I am showing you where the money is. You trade the M, right? You trade the M and you put your stop loss above here. So your money is sitting up here. If I take my trade right here, let's just put the example on. The institutional candlestick is right here. So if I put my trade right here and I put my stop loss right there, so literally, I am trading this setup with how many pips? 7 pips stop loss, guys. I am trading this setup with 7 pips stop loss. And where am I targeting? Any highs? I am just targeting any high that I can see in my way. So I am targeting this high right here. Which has gone way above it. Can we see that setup right here, guys? Just give me a 2 in the chat box if that is making sense to you. Your M and W has set up a target for me to take away your money. I am going to show you an example of one of the trades that I pulled this week, guys. I'm not trying to show off. I'm not trying to show off. It's just to tell you how I trade and how it works for me on live scenarios. I don't want you to just sit back and be like, okay, so Francis, you're just bragging about this. How many trades have you ever catch on this setup? Can we all see this, guys? Can we all see this? This is a trade that I'm talking about. Can we all see my screen right now? Look at how sharp my entry was. And look at the drop. Targeting the equal lows right down here. Still on other screen. All right, so let me show you the trade right here. I think I have it sitting up somewhere here. I think that was GBP card. Look at that trade right there. So I was looking to take the trade right here. and bring it all the way down. Price is still playing up. It comes down. I take partial, and then it went up again. I'm still in this trade right here, guys. So this is the type of things that I am talking about. I trade it live, and I know exactly how it works. Your last red candlestick that was sitting here on a 30 minutes time frame, guys, on a 30 minutes time frame, price dropped down into it, and basically it went up straight away. So basically, every time we find M's or W, is it better to wait for them to complete forming and take the trade to the other side? Of course, I am going to tell you. Oh my God, who is on there right now? So I am going to wait for the M to come into my institutional candlestick, and I am going to take the trade. So because you checked DXY first, you knew the sell of the M was a fake out before. Thank you very much, Lee. The DXY had already given me the knowledge of the direction of the market. So if I see this M forming, I'm not going to deceive myself and be like, okay, Francis, you're going to start looking for a sell. No. While I know that there is an institutional candlestick sitting right here, let me show you one more thing, guy. Look around this area. Can we say this is a double bottom right here, this area? Give me a 1 in the chat box if you know that this area is a double bottom. Price came here, 1, it came back there, and boom, it went up. Double bottom. Give me a 1 if you understand that that area is a double bottom. And have you realized what has happened right there? Look at what this candlestick did. So if you hear about an FU candlestick, this is what we mean. So everybody who was selling or who was buying the W, thinking that, oh, I'm in a buy, or I'm in profit. And then you realize all of a sudden price came back to your entry and then it hit your stop loss. You're asking yourself, how did I hit stop loss on this trade? It was perfect. It was perfect because you refuse to understand that the W, the double bottom, the triple bottom, the quadruple bottom, wherever it is just a target for smart money to target. So I am looking at those areas. I'm looking for those regions to target for my profit. Because when your money gets taken away, your money is ending up in my account. How many of us wants other people's money ending up in our account because they are refusing to understand smart money concepts? Give me a 4 in the chat box. Give me a 4 in the chat box if you feel like that has to be you. Look at that, 78 people on the call, 76 people on the call, guys. I want to see so many people do well. So many people do well just by understanding the concept as to what these banks are doing to us. Thank you, everybody. I am happy for you. And I believe that very soon it's going to be mad in AFA. Things are going to change. Our trades are just going to change. One more thing. Do not forget about your main trading strategy. Do not forget about your main trading strategy, guys. I want you to understand that these things that I'm teaching you, I want you to use it as an extra confirmation to your main strategy. I want each and everybody on this call to be a different type of trader. You can take a trade on your own and say to yourself that I use this confirmation, I use that confirmation. I understand this from smart money. I understand this from harmonics. I understand this from price trap. I understand this from trend line, and that is how I got the trade. I don't want you to forget about your strategy and tell me because Francis said, if I see an institutional candlestick, I can trade it straight away. I am going ahead and taking the trade. Forgetting about your strategy, guys. Remember, if you go to school, you go through a period of time, you are learning so many things, but the exams is always going to be about everything. Right, guys? The exams is going to be about everything. This is what traders do not teach us. They want us to learn one thing and forget about the rest. However, when it comes to the actual time where we have to take the money, we have to incorporate every single thing that applies to the market in order to get high probability trades. What about the pairs that are not correlated to DXY? All right, the pairs that are not correlated to DXY, I have a chart that I'm going to send into the Telegram group is a correlation chart that you can compare after you have identified all the DXY, what you can do. So true. I'll leave here. Thank you very much. You see, when you go to school, you go for 4 years, 5 years, wherever it is, and you get examined based on so many topics. But when it comes to trading, they tell you, learn one strategy, and that's it. One strategy, you're done. Thank you very much. You're done. It can't make you profitable. Don't get me wrong. But once you start incorporating more strategies into the same thing, you mold yourself into a different trader. When I came into AFA, well, all I knew about harmonics, all I knew was harmonics, but then I realized I can add something on top of it to make it even more powerful. And here I am today. I don't depend on signal. I remember today, anybody in the harmonic boot group, we were talking about GJ Cell. Everybody, we already know GJ Cell. And all of a sudden, we saw a signal from the the AFA trade house, GJ Cell. And then I told the guys, you know what, guys? AFA Pro is calling for GJ Cell. And the guys was like, you know, Francis, you see, we are way ahead of the market. I told them that is what the banks do. If you know what the banks do, you will always be ahead of the market and know exactly what the market is about to do. Give me a three in the chat box if you're fired up right now with the value I'm giving you right here. How do we join? I'm on a trip. No. I'll talk about that later. Good. One more thing I am going to show you. Now we understand what liquidity is. We understand what institutional candlestick. The next thing that I want us to understand in trading smart money is gaps and imbalance. What do I mean by gap and imbalance? I'm going to zoom into this area and I'm going to show you something. Can we see? I will need to hear this again. All right, you need to hear this again. Can we see in this area, the wick of this candlestick is not touching that wick? Give me a 1 if you can identify that. The wick of this candlestick is not touching that candlestick right there. So everywhere here, if I put a line right here, and if I put a line right there, this is what I call an imbalance in the market. Imbalance in the market. Guys, you know what? Francis, the 50% of the IC, is it from the body to the body? No, it's from the wick of the first part to the base body. The wick of the highest part to the base body. Thank you very much. You get it. So the imbalance is the part where the wicks of this candlestick is not touching each other. They are not overlapping. So look in this area right here. Can somebody tell me that this area was an imbalance right here? Everywhere there, the wick of that candlestick was not touching this area. Give me a 2 in the chat box if you know that that area was an imbalance. Oh, Jessica spotted it already. Ahead of the game, Jess. Beast trader. You see? So this wick wasn't touching that one. And what happened? Let's see what happened. Immediately, price went past that area. Can we see that price came back to fill the imbalance? So for imbalance, doesn't matter if the opposite candlestick or the same. No, it don't matter. It don't matter at all. All you need is for the wick to overlap each other. That's all you need, for the wicks to overlap each other. If you don't get that, then it means that there is an imbalance in the market. And when imbalances happen in the market, the banks don't like that at all. So what do? They come back to that area and then they sell off. If it is up, they come back to that area and they sell off. It is down, they come back to that area and they buy up. And this is a perfect example I'm showing you right here, guys. Look at that. Look at this imbalance right there. They came into it, filled the imbalance, and then they dropped. So you could have used imbalance in conjunction with institutional candlestick. Can we identify this area as an institutional candlestick? Give me a yes if you can identify that. The last blue candlestick before the down move. Thank you. Thank you. So we could use imbalances in conjunction with institutional candlestick to have set ourselves up for this trade. If I should measure the 50% of this candlestick right here, look at that. Look at that, guys. So your entry would have been sitting right there. Your entry would have been sitting right there with your stop loss there. And your TP is the 50% of this candlestick right here. See, just that alone, just that alone, guys, you're growing your account already. You're growing your account already. I want to zoom in. Oh my God, what's this doing? Look at that. 1 to 6. You're risking 1% of your account to make 6% only by this trade. What did you use? An imbalance. You saw an imbalance. You saw an institutional candlestick. 50% of the institutional candlestick price came in and boom, it sold off. So would you now expect the price to come down to fill the imbalance recently? I wouldn't be surprised if price come back to fill this imbalance. See, price is already coming down right here. Let's look at what the DXY is doing. Look at the DXY going up. And look at the Euro USD starting to come down. What are you using as your target after 50% imbalance? My target after 50% imbalance is the next institutional candlestick, the next imbalance, or the next double bottom or double top. So in this case, this was my institutional candlestick. So that would have been my TP right here. And look at the way price came in, hit the TP straight away, and then it reversed. So have you wondered why I can trade both ways? I take setups, I take it this way, and then I take it the other way. Let me show you an example. I'm not trying to show off. It's what the market gives me, guys. Look at this one. Look at this area. I want to show you something right there. Sorry for my dirty markup on the chart. I've got lots of things. Look at this here. Look at the last red candlestick in this area. And look at the way price came into it. Look at the way price came into it, right? And look at the last blue candlestick up here. And look at the way price came into it. This is a harmonic sharp pattern, right? I traded this all the way up. And right, this is a harmonic cipher pattern. I traded this all the way down here. What else do you want, guys? However you're feeling, just show it in the chat box for me right now. However you're feeling about this. All we need, Pami. That's all we need. We ain't talking about 10 pips, 20 pips, 30 pips. We're talking about 50, 100 pips, however it is. A bit lost. Where are you lost, Sadi? Also lost. Oh, where are you lost? Let me understand. The same stuff I'm showing. Okay, the thing is, it's too complicated. The last red candlestick right here. This was the last red candlestick, right? And I have marked this red candlestick because it is an institutional candlestick. Don't worry about the too many lines I have right here. You lost me with a wick. An imbalance. Okay, we'll get back to the imbalance, please. All right. Let's use this as an example. This could be a live setup we can take, guys. What is this we have here? What is the last blue candlestick we have here? In the chat box, please. And I see institutional candlestick. That is the last blue candlestick we have up there. And what do we have all the way here? In the chat box, anybody following? What do we have in that area? Imbalance, right? Thank you very much. An imbalance right there. And one more thing I am going to tell you, after you have identified your institutional candlestick, the imbalance, the next thing that you need to take the trade is a break of market structure. So this is a low, a high, a lower high, a higher high, a low. So we broke this market structure right here, confirming that now the trend has changed to the downside. So now I am going to take my trade right here. My entry is going to be at the 50%. And this is going to be my setup for this trade. And where are we targeting? Where did you place the FIB? Okay, so I placed the FIB from the wick. Let's make it big and make it reasonable for people to understand. So I placed my FIB from the wick right here, right, to the base body right there. And then the 50% of it. I hope that makes sense. Thank you. So in order to trade this setup, I've given you 3 confirmations that you need. An institutional candlestick, an imbalance, and a break of market structure. So if you look on my chart, most of the time, I will write this area as BOS, break of market structure. Break of market structure. Once you get the break of market structure and price come back, so you're waiting for price to go back to your 50% mark. Yes, I am waiting for price to come back to this 50% and I expect price to drop all the way. And where am I targeting? Where am I targeting? I am going to target all the way down here. Why? Because I have equal lows sitting down here. So that's going to be my target. And what is the ratio? 1:17. I'm going to risk 1% of my account in order to make 17%. Guys, this is what I'm talking about. I have 4 minutes on the call. I am just going to answer questions. Wherever you're lost, wherever you're missing, ask the question and straight away I am going to go through it with you before we finish this call. So before, okay, can you do a live session one day? Yeah, okay, yeah. I'll try and put a live session one day. All right, can we actually do tomorrow? Yeah, I am home tomorrow. Tomorrow in the what time? What time, guys? Tomorrow, what time? In the daytime. Thursday, yeah. Thursday, we can do Thursday. What time on Thursday? 2 p.m. Majority carries the vote, guys. Majority carries the vote. What time? I'm seeing 2 p.m., 2 p.m., 5 p.m., 7 p.m., 2 p.m., 5 p.m., 7 p.m. 2. Oh my God, the 2 p.m.s are 1. So on Thursday, 2 p.m., on Thursday, 2 p.m., we are going to do a live smart money with harmonic session. On Thursday, Pami wants it tomorrow. Oh my God. You're so king to have it, Pami, that haven't you? Yes, oh my God, 2 p.m. Got session. Oh yeah, okay. So whichever time, guys, you say, I am going to leave it to you. Could you do both? Yeah, I can try. I am going to leave it to you guys. Yeah, in your groups, I want you to go and discuss it. What times you have, and then give it to your leaders. I am home all week anyway, so I will try and then fit the best times for the people, and then we do one in a daytime where we can take live sessions and mark up the charts and see what is going on. All right, the break of market structure. Let's talk about the break of market structure. The break of market structure. Euro GBP is perfect for that. So in the trade, what I mean by a break of market structure is because if I look at the trend right here, this is going up high, low, higher high, right? I expected this to form what? A lower high. Instead, it formed a lower low. And what that means is that it has broken the structure right here, telling you the trend has changed. I hope that makes sense. Anybody asking about break of market structure? Should we jump back on? All right, jump back on for 30 minutes, guys. Jump back on for 30 minutes. I am home, so I'm going to allow that. When it goes off, jump back on for 30 minutes. So look, this is what I mean by the break of market structure. We expected price to form a higher low. Instead, it formed a lower high right there. Right? And straight away, we're getting the pullback. So this one is a pullback. Usually, I personally don't like trading the pullback, but it will shock you the pullback, where the pullback is happening right here, guys. Look at that. Look at the imbalance right here. Let's make it big. Look at the imbalance right here, guys. This wick not touching that wick. And look at where price came. Straight inside the imbalance, and it's reversing. This is what I'm talking about. All right. Give me some fires as you're leaving. Give me some fires as you're leaving. Jump back on for 30 minutes.